Exercise 19-22, we're going to record the completion and sales of goods. So during the month of June, production generated the following activity in Car Chassis Company's work in process inventory account. So this box is representing their work in process inventory account. Additionally, Car Chassis has completed jobs 142 and 143, and the cost of those jobs were $46,000 and $35,000 respectively. Requirement 1, prepare the journal entry for production completed in June. So they're talking about these two jobs that were completed in June. So what happens in the journal entry when jobs are completed? Well, let's go back to our slides with the T account showing work in process and finished goods. So work in process is the account where the products are being worked on, and when they're finished, they need to leave this account because this is an in process account. So when they leave this account, we're going to credit this WIP account, work in process, and then they're going to go over here to finished goods, and that will increase with a debit. And because we have to do debits before credits, we will do the finished goods inventory first. And they're going to leave the work in process inventory, and we're going to combine those two amounts, $46,000 and $35,000, and that equals $81,000. So again, all we've done is we've moved $81,000 of products that were being built, but they're finished now. So we're going to put them over here in finished goods, which is probably our warehouse. Requirement 2. A T account for work in process inventory has been opened for you. That's this thing here. Enter the beginning balance, BEGBL, on the first line of the T account. All right. So we've got a work in process. Where would the beginning balance go? It always goes on the plus side. So that is a debit. So beginning balance, and we get the beginning balance up here. We've got 38,000, copy and paste. All right. Post the June activity, including the journal entry. The journal entry is right up here. Made in requirement 1, using the appropriate descriptions as posting references. Compute the ending balance. All right, MOH, remember, stands for manufacturing overhead. So these three costs are similar to these costs over here from the slides where we added these slides. The $200 was direct materials, $75 was direct materials, $100 and the $25 were direct labor, and $50 was manufacturing overhead. So here the costs are accumulating, and then later, when the job was finished, we had it leave the account and go to finished goods. So anyway, we need to increase the work in process account with the direct materials, direct labor, and manufacturing overhead. And those, of course, go over here on the plus side. So we got direct materials used. Triple click, 43,000, copy, paste. Direct materials, not purchased, but used. Then we've got direct labor assigned to jobs. Those, of course, are the wages and salaries of the people who are working directly on the products. And then we got manufacturing overhead, which were allocated to the jobs. And then don't forget, we need to include the journal entries made in requirement 1. So here's requirement 1. Notice this is the work in process inventory account. So how did we affect the work in process inventory account up here? We credited it. Now normally I would put it up here, but we don't have any options for the description. So we can put it down here in the second line. Jobs 142 and 143 completed, 81,000. Now we have to figure out the balance. So what we're going to do is we're going to add these up and then subtract this number. and we're going to put the balance on the bigger side. So when we do the math, we get a total of $71,400 for ending balance. Again, I just added these numbers up and subtracted these. Why? Because work in process, this is the work in process account. It's a plus on the left and a minus on the right. So requirement 3, prepare the journal entry to record the sale on account for job 143 for $47,000. Also prepare the journal entry to record cost of goods sold for job 143. So what we're going to do is, and also it says, begin by preparing the entry to record the sale on account. Do not record the cost of the sale with this entry. We will do that separately in the following step. So we're going to, because it was on account, we're going to get $47,000. We're going to record $47,000 of accounts receivable, and then we're going to record $47,000 of sales revenue. Then, in the second journal entry, we're going to update our cost of goods sold and then lower the finished goods account. So what we have to do is we have to lower the finished goods account for job 143. And how much did job 143 cost us? We have to look up here. It says job 142 and 143 cost $46,000 and $35,000 respectively. So $35,000 is the cost of job 143. Finished goods has to lower. So what I'm doing here is job 143 is leaving finished goods, so I have to lower it with a credit. So that's what I've done, lowered finished goods with a credit. And then we're transferring the cost to cost of goods sold and expense, and that is the debit. Now we have to calculate gross profit. So I will show you in Excel how we're going to calculate gross profit. So the formula, remember, for gross profit is sales revenue. And then we're going to subtract cost of goods sold, and that's going to equal gross profit. So in our case, the sales revenue was $47,000. Cost of goods sold was $35,000. Technically, I should have grabbed it over here. It's the same number. I want you to see where I'm getting the number from. And then, so this gross profit is going to be sales revenue minus COGS gives us $12,000. And that's it.